All right. Hey, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Sorry for being a bit late. Was just on a quick phone call on something important. But here we are. So let's go and take a look at the price. I did um, a stream late last night while the price was actually right after it crashed and had a slight rebound. I just took on a couple of theoretical trades. Both of them actually completely failed. And that happens. And this is why we set stop losses. And that was just mostly an example of risk management. When candles move really, really quickly, I'm able to use 5-minute charts to imitate how I used to trade as a swing trader. It's just that those candles normally take days to happen versus minutes. I feel that when it's multiple days on the candles, then there is a higher probability of getting it right. That's my view on trading certain time levels. Hey, Brian, thanks for letting me know that my audio is good. I see Bitcoin Motorist in the chat as well. Yeah, we're going to take a look at the S&P crash, and let's just go to the charts. All right, here's the weekly chart. The only good news that I have for you on the weekly chart, there's literally only one piece of good news. And that piece of good news is that next week, we're going to have an MRI buy. We can go through history and find other MRI buys. You can see how the last time we had an MRI buy, we crashed down early in the week, almost hit the 50-period weekly average, and rallied off that point. I don't know how long this took. This could have taken the first half of the day that week, or it could have taken the majority of the week and then we rallied at the end. I don't really remember. We can look at the daily candles, but I'm not going to do that. It'll just waste too much time. But you also see that this MRI buy took place within consolidation. So because the MRI buy took place within consolidation, I can almost promise you that I was not very bullish on this MRI buy. I don't like to be bullish on MRI buys in consolidation. I prefer to be bullish on MRI buys if they take place within a crash or at the lows. Okay, this MRI buy is very likely to take place at the low. Even if we start rallying right now, we will still have the MRI buy off the low because it would have happened on the candle before. The only minor caveat to this MRI buy not happening at the low is the crash that we had the week of November 29th. This crash the week of November 29th kind of creates a double bottom if the price goes any lower on a shorter term scale. So in order for me to be bullish on this MRI buy, I am going to need to see a significantly lower weekly close than all prior weekly closes. That means it has to take place at the current price or lower. So any close on this current candle above, say, 45,000, questions my confidence in the MRI weekly being a reversal. So I would want to see a current close on current weekly candle below 43,000, ideally actually even lower. If I want my perfect MRI buy on this weekly scale, I want to see a weekly close that is lower than the swing low of November 29th. So we would need this close to be below $42,000. Then next week, ideally, I would want to see a swing down midweek into the $30,000 range to establish a very, very clear lower swing low that is even lower than the swing low on September 20th, which took place right at $40,000. So I want to see us go down into that $38,000 range without breaking these lows of 31,000 that took place over the summer or in the beginning of the summer. So that's what I would want to see in order to be insanely confident that this MRI buy is going to reverse the price to the upside. But this comes with a lot of other problems. The biggest one of them is we're going to have a depth cross on a weekly chart, which is bad. This is the 20 going below the 50. We'll also be in the middle of nowhere and dangerously close to going all the way down and finding true support at the prior swing high, pretty much the way Tesla did. Here's NVIDIA. It was questioned this morning, but I guess it pulled up. But if I go to Tesla, for example, I'll show you guys. Tesla perfectly came back and touched its prior swing high that took place in 2021, though Bitcoin's prior swing high took place all the way in 2017, late 2017 to be exact. So this is kind of what you want. But I don't really want it to go down that far because that would be freaking scary. But good, but scary still. So let's go back to this weekly chart. So it does create a bunch of other issues, not to mention it's just not good from a moving average perspective. It's not good on many levels. At least that Bitcoin hash rate is still doing fine and miners are profitable. So on that level, we're perfectly okay. It does create some awesome buy the dips early in the year. So that's another potential good thing that's happening. The worst thing about it is if we do get my perfect MRI buy situation on a weekly scale, we completely mess up the monthly scale. I am not ready to alter this triangle yet because this candle needs to end, and we can certainly rally into end of week above this moving average, only sitting at 48,000. So we can certainly rally back up, and then this line is not a violation. Remember, this line is a violation if this candle is closed and this line is going through the body of the candle, but the candle has not yet closed. So there's no reason for me to adjust this triangle every single hour. I'm going to wait till this candle closes. And if this candle closes any lower, but remember, this is also a monthly candle. So we're actually okay. I'm sorry, guys. This is a monthly candle. So even if the week closes all the way down at 38,000, we will still have 3 more additional weeks in this monthly candle to go all the way back up and close above. So this would actually not be a problem. In fact, if this candle swings all the way down and touches the moving average and then rallies back up by end of month, that is still not a violation of this triangle. But I don't want us to exactly swing all the way down to actually 35 would be okay. So that's kind of what I'm looking for. But I don't want the month to close breaking this triangle. This triangle is really, really important. So and I believe that we will not close below this triangle by end of month. So my target for end of month is $46,000. I believe Bitcoin will be above $46,000 by end of month to keep us within this triangle. Ideally above the moving average, but this moving average, which was at 50, but let's just say 48, 46, even 46 actually. So as we get above 46 and a half, something like that, okay? So that's really what I'm looking for. People want to talk about a head and shoulders pattern. I mean, yes, I guess. On a daily, maybe, I don't know. I don't really care for the head and shoulders pattern on a daily. This is a 4 hour. Sorry. Left shoulder. This whole thing is the left shoulder. That's the head. That's the right shoulder. You would need a slanted neck. And in this case, that is your head. That is $25,000 for 60% upswing. So your target becomes the prior swing high. I don't really care for head and shoulder patterns, right? Is that a head and shoulder pattern? It's got 75, 80% of the attributes to be a head and shoulders pattern, but there's not much to talk about, right? There's not much to talk about. Here's why there's absolutely no reason to talk about the head and shoulders pattern. Is because this red line told me that going below this line is a disaster. I didn't need the head and shoulders, right? This told me everything I needed to know. And now I can take this line and I can just move it to here, right? If this line acts as support, and then we bounce up a little bit, and then we break this line, now we're going down further, right? I don't need the head and shoulders. I don't need to look, I don't need these complicated long patterns like Wyckoff's and head and shoulders. Like you can do the same exact analysis with the same exact outcomes without these complicated long patterns that take months to develop. You could do it on a much shorter analysis by only going back several weeks, right? Instead of going back several months or years, okay? It's just easier for me not to acknowledge this as a head and shoulders, but still analyze it in the same exact way for the same exact outcome. So unconfiscatable, guys, come join us in Las Vegas. We're going to talk all things Bitcoin, unconfiscatable. It's going to be awesome. We got lots of speakers. Come play in our tournament. I'm going to be sending out Scammy award voting real soon. I'm going to work on that, and it's going to be great. So come and join us. The price remains $400 a ticket. Let's talk about the Consensio allocation chart. This was my expectation that we would dip. This expectation came in at, right before Christmas. I think we were going into that moving average, and I expected a drop to approximately current levels. But the way it happened, because we went up a little higher, and the way we're dropping right now, it is, I think there's a little bit more downside, right? So here's what we're going to do. I'm just going to move these arrows. I like doing these on camera live so that people don't say it's revisionist history. And I'm even going to take this arrow that I was right about, and I'm going to move it over. Because I do think there is some more downside to go. But at first sign of upswing, we are ready to allocate back into Bitcoin, okay? And this current 4-day candle still has 2.5 days to go. And there's absolutely no sign that it's ready to go to the upside. There is really nothing on this chart that makes me believe that we're not going to go all the way down and potentially test the MRI support. There's nothing here. I don't see any other support. And this is our Consensio chart, and we still have a little bit of time before the long-term moving average starts to decline. But when it does, it's potential trouble. Now, we are certainly way too late to start shorting this market, way too late. And I still believe that we are in a bullish trend, and therefore, I don't want to short Bitcoin in a larger bullish cycle. Okay, the current year was a 60% up year, which probably underperformed Bitcoin considering what the prior years were. Didn't go very far above the prior years, right? It's looking at a bigger picture. It's been 4 years. 4. This is already 2022. That's November, right? So in the last 4 years, since the cherry pick top that I know was a bit exponential, we are only up 200% since then, right? Bitcoin needs to do better than that. Like, it needs to do better than that. And that's why I think Bitcoin is still right now slightly undervalued. I believe Bitcoin is undervalued, but that doesn't mean that it can't dip all the way to 20 before rallying to 100 late this year or even next year. Okay, things can always get more undervalued. This is why, again, a stock like Tesla, drops what, 40%, 50%, 30%, drops 30% from its all-time high back to its prior swing high, right? And then a few days ago, it was almost back to that, right? Did anything change in Tesla? Well, not really, right? The speculation on future Tesla earnings and gains for the company got a little bit out of control a little too early. It doesn't mean that Tesla was mispriced over here, just short term. Okay. Now, I do have to say, like, I don't want to pick on, oh, where's that tweet? Hold on a second, I'm gonna go to my liked tweets. It was a tweet from Kathy Wood of Archivest. Somewhere. I think I hit the like button on it. Yep. Where's the Kathy? Oh man, I'll never find it in my feed. Too bad. So, shoot. Right. In that case, let me Google for it then. It was a tweet from Kathy Wood of ARK Invest about oil. Damn. Like I follow way too many people. So like if I go to my homepage, I won't be able to scroll far enough down to find that tweet from to find the statement. There was a statement to an interview maybe. Oh God, what is that? No. I saw Wood. It wasn't Kathy Wood. Shoot. I knew I should have saved it. I saw it on my phone this morning, but I didn't like save it on my laptop. Anyway, so as you guys know, for the last, I'm jumping to oil now. As you guys know, for the last while, I've been explaining why the price of oil is going to rise. And remember me being dumbfounded, why in the world would Kathy Wood invest in Twitter after the CEO leaves right here, pushing the price up by buying 1 million shares and now sitting in a horrible losing position? It's the same thing applies to oil. She was bearish on it, thinking that oil would not go above $70 because everyone's going to start using green energy. And that's just like, I don't understand. Like she's really smart and she did really, really good with her ARK Invest. But these are like ARK Resource Innovation ETF. Is that next generation internet, right? Like, look how horrible this is. And we talked about it in prior channels. Like she was ARK Invest was like the superstar. And look what happened now. It's a disaster. And these feel like just not proper economic-based decisions, right? Like it's an emotional decision to buy into Twitter when the CEO that was anti-censorship, not pro-censorship, leaves. And I don't understand how, in the current environment, you can have the view that everyone is actually moving to these alternative energies and green energies, and they're actually efficient. Like Germany is shutting down its nuclear power plant. Like, where are they going to get the energy from? Wind and solar ain't going to save Germany. They're going to have to keep buying natural gas and oil from Russia to do it. Like, it just looks good because the environmentalists made them drop their nuclear. So I don't understand these emotional financial decisions that make no sense whatsoever. This is why I've been bullish on oil and bearish on all ARK Invest ETFs, because like I don't think they're making proper economic decisions. Like I don't get it. I just don't get it. ARK, well, what is the innovation? Like I bet you they're all down. And the markets have been crazy up. I mean, not lately, but not, and by lately, I mean the last 2 days. But look, the market's already rebounding. Like, I'm still bullish on the overall stock market. Like, I'm still very bullish on the overall stock market. Still making higher lows. All right, daily chart of Bitcoin. Yeah, being up 200% is not as good as, is not like being down 50, 60%. Like you can't really recover from that. Doesn't matter how much you were up in years past. It doesn't matter. Like once you drop that much, the only thing that can recover from that is like Bitcoin, though Ethereum has also done it. Yeah, KB, good job getting out of ARK. No, it's been a bit of a disaster lately. But again, it's these like decisions, like when like these decisions based on social views, not based on economic views. Like big tech can kind of get away with bad social view decisions because people are using their technology and then they're selling the data to the government, making a lot of money. So like Zuckerberg and Google, they can make up for their bad economic decisions based on social views because they're making money in other ways. Daily chart of Bitcoin looks horrible, but it can be in line with the weekly chart. The daily MRI buy is coming early next week, which puts us in line with the weekly MRI buy coming also next week. So those two, the moon and the stars, can actually align with a swing down into the low 30s. And that could be a potential exception. Like normally, I would never enter long when this chart is in a full downtrend. But there are occasional buy the dips that I'm willing to risk. Like this was a potential buy the dip I was willing to risk, but it happened too quick. Wasn't ready for it. Okay. And clearly this was not a great long-term buy the dip because we passed it, right? Let me give you a long-term example. As you guys know, I felt that this was not necessarily the end to the bear market. I'll admit, not the best call of my career, okay? I did not trust this run-up, and in hindsight, that was a Ponzi. That was the token plus. But I got another chance. I was ready for this thing, okay? Because I was so skeptical on the run up, even won that bet with Crypto Man ran, that we like when the price of Bitcoin was sitting at 8,000, I made a bet that we're going to go back to 4,000. And then we went all the way to 14,000, and that bet wasn't looking very good. But I won that bet because we went down to 4,000. Okay. And I was ready for that. And even though I was in South Africa trying to get on the last flight out of that continent, I did tweet out that this is the buy the dip, right? So there are buy the dips that are worth the risk, but they have to be very catastrophic. They have to be catastrophic. This buy the dip was okay, but it wasn't catastrophic. Had this fallen down to 20,000, like I thought it had a chance, that would have been an absolute buy the dip, right? Had we touched this line, boom, catastrophic buy the dip. Now that more time has gone by, I'm comfortable buying the dip a little bit higher, right? And also based on the general political and economic environment. Normally, I would say no, wait for the catastrophic buy the dip. And that's when you can, bet the farm. Not leveraged. Don't leverage the farm, but bet the farm. Okay. Because from there, the probability of going down is incredibly low, like just incredibly low. Okay. Did I miss your super chat, buddy? Let me see. Maybe my moderators might have thrown it in the chat. Let me see. I don't see a super chat. Oh, there it is. Gotcha. Tone, can you look at the bearish divergence on the monthly RSI and have a look at the monthly MACD? Yeah, we can do that. Here's the monthly MACD. The monthly MACD has crossed, and that's bad. But I still don't think we're in the 2017 bubble, guys. I don't believe we're in a 2017 bubble. We're more like this, where the MACD crossed over, and then it crossed over again a few months late, 6 months late. So I do think the MACD will cross over to the upside 6 months later. I don't believe we're going all the way down. But MACD is just moving averages, and we see moving averages here, right? So I see it more like, they'll cross over, but they'll cross back. And the divergence of the RSI. There is some divergence of the RSI, right? You can also go shorter term. That is pretty big divergence of the RSI. So what does the divergence in the RSI tell you? Okay, well, let's go there. This is from Tone Vays. It's my nutrition. That's my diet and nutrition plan for 2020. So if you go to on-demand videos, technical analysis here, I talk about divergence. So let's go back there. What does this divergence tell you? Well, it only tells me one and only one thing, that because of this divergence, the price of Bitcoin is likely to dip below the prior swing low. That's all. That's all it tells us. It doesn't tell us we're going to go in a bear market. It doesn't tell us anything like that. It just tells us that there's a high probability that the price will go below $35,000. That's it. Okay. We made a higher high briefly, higher swing high slightly, higher close. Close is what matters here, right? So there is a greater than 50% chance that we will swing below these lows, 35,000 on a closing basis. And it doesn't actually say anything about intraday, but it says there's a greater than 50% probability that we will dip below $35,000. And we're not that far away from it. And after that, the divergence will not tell you anything more. It would be nice for this monthly RSI to get to the oversold one day, but it never has. Okay. And the RSI is already below prior oversold level. So it kind of already reached its target based on RSI. Okay, that's all we got there. All right, daily chart. Also, guys, the financial summit taking place in the Dominican Republic, August 1st to 6th. All right, daily chart looks bad. I'm not buying this daily candle, absolutely not. It's another bearish candle. I know the market is rallying a little bit, but doesn't seem to be affecting Bitcoin. Let's see if there is a daily MRI buy. If that's going to rally the market to the upside. Coming early next week. Short-term chart, this is the 10-minute chart we were using yesterday. I'm going to delete some of these lines because they're just in the way when I move up the scale. Not a good look for the 10-minute chart. We don't normally care about 10-minute charts. Here's the 1-hour chart. Not a good look for the 1-hour chart. Not a good look at all for the 1-hour chart. We rallied last night. Here. Oh, this is this morning. Sorry, this was last night. Rallied last night. The MRI buy didn't do anything. And right now we're going down. So once we go below this area in the hourly chart, that's bad. And once we go below this area on the hourly chart, that's worse. So this hourly chart tells me we're consolidating at the lows. We did not have our V-shaped recovery. We have now 3 lower swing lows, and we don't know if this is going to be a lower swing low or not because we haven't had enough time. We have not gone above the prior swing high either. So this candle will either need to go below this swing low or above this swing high. As long as it's in the zone, it's in a no trade zone, right? Needs to get out of this zone, up or down on the 1 hour scale. Okay, that's the zone. Needs to get out of the zone. As long as it's in the zone, we know nothing. I know nothing. GBTC is going into a beautiful buy the dip situation for me personally, especially with such a negative premium, because the FOMO is going to set in. And waiting for my money to clear with the brokerage account, and then can start buying this dip once these charts align. And like I said, I'm willing to go in on this early for a 20 to 30% bullish allocation at the lows, because look how much money was saved by getting out early. Okay, the final 20% was taken out right there at 47.5. So getting in down at 40, you know, this is how you preserve your capital and increase it. So this is just another way of doing dollar cost average. Funding rate. Yeah, let's see if the funding rate reset. The funding rate doesn't look great. I don't know if this is the best metric I can use. I can also go to my friend Tyler Cotes, one of the authors of the Hyperwave book, and see that you know the current funding rate is negative, but only on BitMEX, I believe, and the others might actually be positive. This is that Hyperwave chart that he has, and it's already been broken. So this may not be phase 2, though we can still somewhat adjust phase 2 a little bit. We can move this line to here, and we can cut it to this, but this needs to rally. We need to rally. Let's see how this week, oh, it's a monthly chart, sorry. This is a monthly chart. So let's see how this month ends, and then we can discuss. Gold is dropping, and like I said, gold is in a bit of an uptrend, but nothing substantial to really warrant any entries. Unconfiscatable, guys. I'm gonna keep promoting it. Come out. We still have room. The carnivory dinner is running low, maybe 20 seats left for the carnivory dinner, but the conference still has room, so come join us in Las Vegas. This is it. The S&P 500 has rallied off of a moving average. If the S&P 500 gets back halfway through this crash candle, I'm going to expect it to break to new all-time highs in the near future. All right, that is it. This stream has already lasted a little while. My moderator sent me some comments. We do have 750 live viewers. The live viewer count is increasing. Let's take a look at some of the comments my moderators have chosen. Let's talk about the head and shoulders. I already talked about it. If Bitcoin closes this week below 45,000, this hyperwave will complete and be a failure. No, it won't. That's not how it works. It's not how it works. So you really need to. So on my website, I mean, you can purchase. There's actually 2 workshops here. This is a 4-part video series, 20 hours explaining Hyperwave. You can also buy the book Hyperwave, right? Like if you really want to understand Hyperwave, you got to spend like a little bit of time and maybe money, or you can go and watch the old Lucid Investments Hyperwave YouTube channel, right? These videos will eventually be free. At the moment, I don't have access to the YouTube channel. But I'll get it soon. I'll start making them free again, at least this one. We'll get to that one eventually. But that's not how Hyperwave works, right? This is only phase 2. And we really need to enter phase 3 to take proper price advantage of a Hyperwave. Right now, this is just a chart. This is way premature. Hyperwave generally tries to get you out of an exponential rise, right? So you don't really use Hyperwave within phase 2 for trading, but you can barely use it within phase 3. Hyperwave is ideal for phase 4 and how phase 4 ends and what to expect after the ending of phase 4. That's the beauty of Hyperwave. So at the moment, this actually means absolutely nothing. Like, it doesn't actually change anything, okay? Next. Look at the hash rate. Sure, I don't know if I can pull up hash rate on trading. Can I pull up hash rate? Where would it be? Would it be an economy maybe? Yeah, I'm not sure where it would be. BTC dot. Let's see what happens. Dot D. I don't know what shadow hash rate is. I can start Googling for it, but I don't really want to. With Bitcoin dominance being so low, would it be fair to say that the blow off top happened in total? No, not really. Look, Bitcoin dominance doesn't mean as much as it used to, mostly because a lot of these unlicensed, unregistered securities have found a way to either A, legitimize themselves in the eyes of the government, which is kind of crazy, or 2, the government just can't police it and enforce it. So this is how we have Staples Center has the crypto.com logo on it. The Miami Arena has the FTX logo on it. So that's the reason why Bitcoin dominance is dropping. But Bitcoin will continue to rise versus each asset individually, but not all of those assets in aggregate, because there's infinite number of assets you can create. So any comments on Fed freakout? Bitcoin and the S&P are totally tied to Fed liquidity. How are you bullish if the Fed is stepping away? Well, very easy, right? So I've explained many times how the markets work, right? Fed doesn't actually do it. I know everyone thinks that the Fed is so powerful and it does everything, but it really, really doesn't. So Fed says some shit and the market freaks out. So then the Fed backs away from the shit that they said and doesn't actually do it to such a bad extent. So the market has a hissy fit in order to make the president, the economic advisor, or the president, call the head of the Fed, who is his employee. Like, you see, people confuse. People think that the Fed is all powerful, controlled by these, Rockefellers and all those like families from 200 years ago. It's not. It's really, really not. I mean, they make profit off of it, but they don't control it, right? So the chairman of the Federal Reserve, who right now is Powell, is an employee. I was going to use a different word, but I'm going to get my channel banned. He's just like an employee at the disposal of the president and his economic advisors. Now, I don't know how much our current president ever knew about economy or how much he knows about the economy now. But the president does have some economic advisors and the Treasury Secretary, Yellen, that do understand a little bit about the economy. We can debate all day long, whether they understand it properly or not, but they do understand it. And the chair of the Federal Reserve is their employee that does what they say. Okay. So if he says something that threatens the stock market or politics, then they will just give him a little phone call and tell him to not do it, or he gets fired and replaced by someone else. That is basically how the Fed works. So it doesn't really matter what the Fed says. It matters what they do. And they're not going to do anything that threatens the stock market. They're just not. Okay. If they say something that threatens the stock market, they won't do it. If they say something and it doesn't threaten the stock market, then they will do it. So that's why the market always has a hissy fit whenever the Fed tries to say something. But they never do anything that endangers. They can't. They get fired. Or like the people get fired. Right? Like imagine you saying something at work that makes the company price stock drop. Elon Musk can do it because no one can really fire him, even though there is a board, but he's basically kind of in charge of the board, right? But if you're an employee of a company, no matter how high you are, even a CEO like that doesn't have that of a public company that has a board, you'll get fired. You'll get fired. Same thing with the chair of the Fed. You'll get fired. It's that simple. I'm sorry. Like I hate to remove the conspiracy notion from the Fed, but it's really that simple. See, this is why like each president kind of elects their own chair of the Fed. Like I'm not actually sure if Trump replaced the chair of the Fed. So let me I'm curious. The guy who made his name on "You're Fired," Fed chair history. I want to see if there was a replacement in chair of the Federal Reserve. Okay. I mean, Wikipedia is a kind of a bad site, but they're at least good for things like this. Like they're not going to alter history on this, right? So let's see. So Janet Yellen was replaced by Trump, and he put in Jerome Powell. Okay, so Trump did replace Janet Yellen. Now, Janet Yellen is now the Treasury Secretary. So do you think Janet Yellen wanted to quit? Of course not, right? She's clearly still in a position of financial power. She had no reason to quit whatsoever, right? Like, what's his name? Where's Volcker? Or Greenspan, sorry. So Greenspan was the chair for a while, right? He was the chair from 87. Well, look, actually, every president. This is first appointed by. Okay, so Roosevelt appointed 2 people. Jimmy Carter appointed 2 people, right? So, so Carter comes in after Nixon. Hey, Burns, you're fired. I'm gonna put this guy in, and then, hey, you know what? I don't like what you're doing. You know, so Jimmy Carter fired him, put in Paul Volcker, right? Volcker was chair for a while, 8 years. Guess what? Replaced by Reagan, right? Replaced by Reagan, put in Greenspan. Greenspan was chair throughout all of Reagan. Bush comes in. Bush came in 2000. You know, that took a little while. And put in Bernanke, who stuck around through the first half of Obama. He fired him. Like, do you think Bernanke wanted to be fired? Look, each one of these people wants to be in the Wikipedia for being the longest Federal Reserve chairman in history. Like, they don't want to be fired, but they get fired. They're employees. They're just employees. They will be fired if they don't do what the president and his economic advisors say. It's really that simple. And it's only a matter of time before Powell gets fired, unless he does exactly what not Biden, but like someone was talking in Biden's ear. No, I don't have it backwards on the Fed. I really don't. You guys do. You guys have it backwards on the Fed. Tone got told by IBRK, which is Interactive Brokers, that they are allowing back again access to crypto products like GBTC to CH and other EU residents. Great, excellent. It's been many months, and yeah, that's good. That's good to know. Guys, stop buying the conspiracy theories that the Fed is all powerful and is owned by these private families that control the money supply. It's crazy. It's insane. It's insane. So how will the Fed control inflation? Rate hikes will affect the market. Well, very carefully, right? They have to raise rates slow enough not to affect the stock market, while at the same time pretending to the world like they have anything to actually control inflation. All right, guys. That's it. You get a little history on the Fed. All right. That is it for me. Come out to Las Vegas. Come join us at Unconfiscatable. Hopefully, we can perfectly time this dip sometime next week, where I think there is a high probability of doing so. Like I said, I'll consider adding an allocation here without validation of consensio if all the moon and the stars perfectly align with all my other metrics across daily and weekly scales around this 4-day chart. And it would be a very brief allocation that would scale up only with consensus. All right. You can also support on tonevays.com with on-demand videos or the MRI indicator. All right, guys. Thank you all so much for watching. And I will